So because you understand how to hedge now, yeah, and you're doing it in the opens, and with the opens, it's going to be a break above or below, isn't it? Right. So now for entries, this is the Bollinger Bands. Now if I double click on the Bollinger Band, you see the deviations here is 2.5. Yeah. Okay. Cool. So it's larger than the standard deviation. Now the deviations are. Let me get my pen. This is the deviations here. Let me change the color. Do you see that? These lines here? Yeah. These are the deviations. It's the deviation is coming from this middle band. Yeah. So if I change this now and make it smaller, I can get the bands to come in together or wider apart. 2 is the standard deviation that's normally set a default setting. We've just gone 2.5. So this here. Yes, I know. That's how we're going to change it. I'm going to send you this for you to use, yeah? So it means you'll get less entries, but you'll get less entries, but you'll get quicker moves off of them. Yeah. So this here is a 20 simple moving average. If I went to indicators, trend, moving average, and I change that to a 20 simple yellow. Well, what's going on? It's not exponential, I'm sure. No, this is the 20. See the 20 here? So that is 20. 20. Yeah, I've just changed it to 20. Yeah, this is 20 simple moving average. Wait a minute. What? What? What is this? It is a moving average. How weird is that? $20. That is a bit weird. Where's the red one gone? Why is it below when this here is the... What am I not seeing here? But the middle band is a 20 moving average. So what am I not seeing? Yeah, that's what it is. Wait, let me just check. Why is it shifted? Did I shift it? I did shift it. Why did I shift it? I can't remember now. So it would have been something I did a while ago. So it's probably a good thing that we don't have it with a shift on it. Alright, okay, cool. So you can see now. Well spotted, by the way. If I do put the 20 back on, you'll see it's exactly exactly the same, isn't it? You see that? Yeah, cool. Alright, so the 20 moving average, or even the 200 or the 100, they act as dynamic support and resistance. So you can trade off of them, but typically what happens here on the price is the price will bounce between typically, yeah? Right? If you get a strong trend, if I can show you one with a strong trend on it. Like here, okay? So you see here, just see how it's just falling, and it's staying within the two. Yeah, that's because of how fast it's falling. Yeah. So what this is, it's a measure of volatility. That's what it is. The wider the bands go, the more volatile. The closer together, the less volatile. So we'll take a bit of a guess here, but see, this is before the London breakout this morning. So if I move it here, right, like this, do you see how the market got a big move here, got some movement here, and then we've got this here's nothing, 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 nothing. So if we check the times, this thing's 2 hours ahead, so that's like 10 p.m. through to 9 to 7 a.m. Do you see? So that's the early hours of the morning. You wouldn't trade euro-dollar early hours of the morning, would you? No. So that's why we see that like that. But when the market opens up, we can see now the band, the distance between them. Here, nothing's going on. As soon as the bands open up, it's where we have movement. Yeah. Right. Okay. Cool. So that's why we use the Bollinger Bands for that reason. Yeah. Now, if we look at the indicator below it. Now, what this is the money flow index, right? So it measures when money's going in and out of a particular asset or stock or whatever it is, and so forth. What I've done is I've marked here in red is the extremes. Yeah. So if it hits the red line, yeah, either side, you buy or sell. Buy when it hits the bottom, sell when it hits the top. That's how you do it. Yeah. So you don't do it any other time. Yeah. No, you don't do it any other time. No other time do you need any other confirmation. Yeah. So if it hits it hasn't quite hit it here, but we see it's hit it here. Let's come into it. That's the extreme because that's 10. Yeah. And this thing measures from 0 to 100. 10 is the extreme. 90 is the extreme. So if we do this to see where it hit, I know it's not 100% straight, but you can see here, and then the market rallies off. If we measure that, there's 17 pips. Remember, it's a 5-minute time frame we're on at the moment. Just so I can show you more examples, yeah? Now, other than that, what you'd be doing is you'd be looking for... so now, the red one to one side, you know with the red one you don't need any confirmation. If it's the higher or the lower, yeah, you simply go in the opposite direction. Now the reason being is because if this thing fails, if this thing keeps falling and this thing keeps falling as well, the only thing that's going to happen is you're going to trigger your hedge and you'll be fine, won't you? Yeah. Right. Yeah. Now what we want is for it to come back, and that's what you should do most of the time. So if we look here, because it's a 5-minute time frame, here you might not have got in here. You might not have, even though it's come up, it's hit it. You're waiting. You might not have, because you can see it's not quite touched it yet. Yeah. You can see here it's not quite touched it, but here it did what we did. Yeah. Now here it's come up and it's hit it here. Yeah. Now it's just slightly away from it, but hardly anything. So you might not have taken it, but what you should know is that the bands carry more weight than anything else. Yeah, the bands carry more weight. So that's why with this 2 point, because if I do this now, show you the difference of the normal setting they give you is 2.0. Yeah. If I do that, yeah, that's the standard one that they give you. Do you see what I mean? Yeah. All I'm doing by having it 0.5 away is meaning it has to now extend a bit further to come in and collect your order. Yeah. If it has to do that, the chances are that it will run away quicker as well. Right. So it's a bit like an elastic. So if I've got or like a bow and arrow, yeah, like this, and this is the bow. This is your arrow, yeah. If you shot it like that, you might not get no movement. If, for example, now you did, sorry, no, not that. Let's imagine now you got your bow, and you've pulled it back, yeah. You got your arrow here. Now, that there is when you let this go, it's gonna push in and force the arrow out, yeah. And the arrow will go forward. Make sense? Yeah. Now, with this bow, how can you make the arrow drive forward with a lot more force? You pull it back more, don't you? Yeah. So the further you pull it back, the stronger it's going to force it to go this way. Yeah. Make sense? Okay, cool. Right, so that's what's happening with these bands here. Yeah. So the reason why we're not using, we could use this, the lower one, yeah, but then this one here, you've got entry here. Let's see how that goes. it would have hit your target just about. Yeah. So what I want to see is I want us to have, I want you guys to have a lot more certainty in it. When you take it, it starts to run in your direction. Not I don't want it to trickle around. I don't want you to be in a hedge if you don't have to. We'd all much rather the trade closes quicker, sooner rather than later, isn't it? Yeah. Okay. Cool. So it's the same thing that we're doing here. So that's the reason why we're using the outer 2.5. Yeah. So let me see what other examples there are. Right. So this one here hasn't given you the best example. This is pound dollar. Pound dollar's been falling, but you see, look, you see here, this one here. This is at what time? 7 a.m. So at 7 a.m. you could trade it because the market's opening. And you know the market's opening. You see where you've got it? It's come up to the high here. Yeah. You could sell it when it comes to high, couldn't you? Remember, you don't need anything on the red line. You don't need anything. It stands alone. The signal. Yeah. So, Jesus, it's terrible writing. What's the parameter? What's the name of the parameter for two? It's deviation. 2.5 is deviation. But I'll send you this. I'll send you the template. So if I do that, see if I can get a straight line going up. Okay, that's it there. See, that's the one. That there. What's that? Doji. So there's nothing there in terms of price action. You wouldn't trade it. There it is. See that? You wouldn't trade that kind of price action, would you? Normally you wouldn't touch that, would you? No. So you see how because it's hit here, you can take it, right? Now there's another one. We can't look at one and not the other because when you're trading live, you're going to come up with these examples. Alright, so let's say, remember this is standalone. Yeah. So if you take this one here, from here, what would have happened? You'd be stuck, isn't it? Right, for a little while. Yeah. Yeah. Okay. So why would you take this one and not this one then? Is there any reason? Answers on a postcard. Or the band's expanding, yeah, Patrick. So the bands are expanding. So, all right, okay, cool. Well, yeah, you could say the bands are expanding, but there's not much difference in size here, is it? The reason I'll tell you why you wouldn't do it because at that time in the morning, that's 5:30. You with me? Yeah, is that making sense? Just look below. Look below here. Here. See down here. If I do this, see the time. Yeah, exactly. It's no point trading. Yeah, got it. Make sense, Ference? Yeah, yeah, perfect. So we're not trading at that time in the morning, but here it's different because of the current what's it called? Because of the current because of the current time. So because here at that time in the morning, there's no volatility on the pound and those currencies. You're not going to trade them at that time. However, the market starts to open up after 6 a.m. So over here, do that, and that's what 7, isn't it? Yeah, 5 past 7, 7 a.m. Yeah. So and what happens is you will see when it goes between these two here, yeah. All you want to do is on the red ones, you'll see typically you're always going to get the move that you need. So when you go into markets that are more moving, now look here you've got an entry. Let's see what this one did though. So here, this one here to the upside did nothing. You would have been a buy, yeah. Do you see that? Yeah. It would have come down, triggered you on your sell position, yeah, and obviously closed you out for profit on the sell position, yeah. Um, Now, any questions at the moment? No, I take that as a no. Cool. Yeah, yeah, that's correct. Yeah, yeah, 1020. Yeah. Now, you see here, if you use this here, right, buy, what's going to happen? Because we can see how it plays out. So, let's say he took here, took the buy. Yeah. How much did the market move by? 16 pips. So you might have been okay because it's a 15-minute time frame. So 10 stop loss, that would have just taken you out for a profit. Yeah. You see that? And then I'm recording this anyway, so I can send it to you guys. Taking out for a profit. Now, what about here? Here, would you take this trade? Let me just mark. Let me just mark where they are. Yeah, would you taking it? Yes or no? Valid? Yes or no? No. Why not? Because what? Sorry. Where's the confirmation got to be? Exactly. Yeah. Exactly that. Uh, Patrick, I don't know if you can hear what's being said. So the reason being is, why is it that this here is valid, but these two are not? Yeah. So if you have a look, we've got the signal here, the blue. Yeah, it's come, it's done what we needed it to do, the blue, and again here as well. Yeah. But because it's not touching the outer band, we don't want nothing to do with it. Does that make sense? Yeah. So it must be touching the outer band. Yeah. For it to do that. Uh, Um, no, it's just touch it. It's like, for example, if you touched a woman's bum, yeah, you get in trouble for it, right? Now, what would be the definition of touching? It's the same thing, right? The definition of touching would be just to touch it. You don't actually have to grope her for her to be upset. Just touching it would be seen as harassment, isn't it? Yeah, same thing, right? So it just has to touch it. That's it. If it touches it, that's enough for us because of the deviation. Yeah, because remember, we changed the deviation on this. Yeah, so because we changed the deviation from 2 to 2.5, it means that we know that when it comes to hit the outer bands, we're going to get more of a movement. Do you see what I mean? So that's we've got 5 minutes. You can trade this on a 5 minute if you want. Trade it on 15 minutes. On 15 minutes, you'll get some less entries. Typically, you should get more of a move. Is that How is that a buy line? Oh, but you got it now. Yeah. Okay. Cool. Um, right. So if we flick through, we can see what the different things are doing. Just delete that. Just deleted that because that trade's closed out, so it's coming to profit. Let me just see. There's nothing else open. Yeah. Close that as well. Okay. Cool. Right, so back to here. Right, so um, let me see if there's any setups that we can take then. Yeah, should we do that? Yeah, cool. So let's see if we see anything. If you spot anything, let me know. I don't see anything at the moment. Oh, look at that. We missed that one, didn't we? Do you see here? Do you see what I mean? So this has come down. See how this has touched it. If you want to be pedantic, you say, oh, it's just missed it by a millimeter, but that doesn't matter to me. But that's when you take it, because when it has to stretch down to, yeah, well spotted. But yeah, you're right. But what I wanted to do was just point you out to this bit here. When it does push down like that, it has to push a bit further to try and find it. Do you see what I mean? So that's why we should be okay with it all the time. But then what happens is, this is like anything that you're doing. So just play with it, practice with it. You see here, it comes through, and here it comes through. Here it comes through. You could have taken any of these, but it didn't confirm here. Yeah. So this you're going to use. Right, a call went back. Okay, cool. Right, so shall we look and see what else is there? Yeah. So as you can see here, so the question is, would you taking it when you're taking it? It all depends. But if we do, do you see how it only turns as it gets closer? Do you see that? Yeah. Do you see that here? So here, if we have a look here, you see this is the blue line. This is what it's doing. Yeah. So you can see where you're getting the signals to sell, but it only moves down as this gets closer. Doesn't quite touch it, so more than likely you would just let it go. But that's fine if you just let it go as well. You know that, don't you? Yeah. If it doesn't meet your criteria, just let it go. Move on to the next one. Never sit there wondering like what could have happened or did you miss it and so forth. Look at that one. Wonder what happened there. That's right. Yeah, it's quite a move, isn't it? It's quite a move. But look, let's say you would have taken this without seeing the news. You would have sold it. It would have gone against you. You'd still been alright, wouldn't you? It rallied up like 40 odd pips. Dollar Swiss. I'm looking to see if there's one that we can take. I'm thinking that we can take this one here in a minute. About 5 minutes. Oh, it's getting ready. Need that to push up. Just a bit more. Alright, let me do this one. Now I know this isn't touching. I know this isn't touching here. I can see that quite clearly. It hasn't touched the blue line. But it has hit a level for me, yeah? Do you see that? Yeah. So why would I take it? Well, remember, supply and demand is still the key primary thing of what is the markets, isn't it? Yeah. So now I just got to see what this is going to do, how it's going to play out. When you're hedging, you would always put in, no matter what, even if it's going your favour, you would always put in your hedge, just in case something comes out and happens and so forth, and we can't see it. Yeah. Buy stop. Yeah, that's correct. So you can use the indicator on this if you want, but you know, you guys know me. I prefer to draw it, isn't it? I prefer not to have the indicators up. I prefer to draw it. But you see what we was doing with the wicks beforehand as well. When you're trading between the bands, you should see levels like this a lot easier. Do you guys find that, or do you not look? You find it, yeah? You should find levels a bit more easier, shouldn't you? Yeah, a little bit easier to find, isn't it? Levels. Yeah. So with the levels, you still trade from the levels, but actually I want to see setup that I can take where you see it hit the band and see it play out. So while that's going, let me just switch. Look at that one. That one there is hit the bottom one. So look, I'm going to buy it, yeah? I'll put my hedge in. 8 pips below. Leave that, let it play out. Yeah, do you see that, yeah? So this one hit the bottom band. Ideally, I would have taken it when it hit the bottom on the red one. Yeah? Sometimes I see it, sometimes not. Yeah, and it's like that. It's like anything. Sometimes you'll notice them, but you'll notice them more and more and more the more you look for them with these levels. But this is one that we wanted to see it off the bands, isn't it? So this is off the bands, this one. Right, so well that's playing out. We can see that play out down here as well, can't we? So yeah, I'll be able to see when something's going on. Let's quickly flick through and see what else there is. Cables is falling. Cable's not offering us much right now. What do you do when this happens? Bang, you bought it here. Marcus has run against you. What do you do? You make your money on the other side, don't you? 20 pips, nice and easy days. You'd have been finding it. Right, so look, this one here. Let's do the cable one now. Yeah, look, I can buy this one because it's below. Do you see that? Yeah, I can buy it because it's below. I don't need it. I don't need it to be touching anything. So I know it's a 30-minute time frame. Just go. Now I've got to have a hedge in place. Now we can see how they play out. This is a 1-minute time frame, so remember I took this on the 30-minute, yeah? That's why I took it. It's 30 minutes. So just to confirm, if you guys are watching this again, it's hit the red line. I don't need confirmation. I've bought it. Put my hedge in because really it would be stupid not to, you see. But that's the only time when it's hit the red line. Otherwise, let it hit the outer band or the inner outer band, because what will happen is these Bollinger Bands are used for two different ways of trading. One is mean reversion, hits it and returns to the mean. The other one is for breakouts. As you can see, the market can break out and keep going as well. Yeah. So that's what they're used for. So you guys have seen I took this on a different time frame. Let's see which one's gonna be profitable for us first of all. We'll find out. Dollar yen's been a bit horrible. See, look, see this dollar yen. Do you see the middle band? You always get reaction in the middle band. But dollar yen's been horrible today. If it hits one of the bands, we can take it. But I want to show you something. While we've got dollar yen up, look at what it's doing. Do you see that? Yeah, so that price action is showing us consolidation. That thing's going to break. Yeah, do you see that's going to break? 15 minutes. See that one. Yeah, so that is within consolidation right now, isn't it? It's rangy. Which way do you think it's going to go? See, I think this is going to sell off dollar yen because it's been rising all week. Typically, when markets rise all week one way, at the end of the week, traders start closing out the position, banking profits. End of the month, they start balancing their books and stuff like that, and they usually take off their positions, and they will then start taking profits and stuff, and you'll see a market reverse. I'll expect this thing to drop, but we have to wait and see what it's going to do. I don't think dollar yen offers any trading opportunities at the moment. Pound yen. Pound against the yen, right? So, do you see how it's coming down to test it? But it's not touching the outer band yet, so we're not that interested just yet. Euro. So, euro dollar. Why am I so confused? Euro dollar. Didn't I just have a trade in euro dollar that I closed out? No, dollar CAD trade. Sorry, my bad. So euro dollar's a buy. Oh yeah, of course, yeah. It's the one we took together. See what happens. And get forgetful. Right. Any questions as we're doing this? Any questions you have, fire them across. I know it is pretty straightforward and simple, but it doesn't mean you won't make mistakes of it. Like anything, you can make mistakes still. So if anything you need clarity on, clarification, let me know, and we'll get it clarified. Let's see what this is telling us here. I can, yeah, I can use trade and stop on the first trade, but it hasn't moved enough to give me. There's no room. Um, dollar Swiss. Dollar Swiss. It hasn't moved enough yet. If I do this. Do you see what I mean? It's not moved enough, so it's a sell, but that there is less than a pip at the moment. Do you see that, Ference? Yeah. Less than a pip, yeah. Now look, pound dollar has done it's triggered us, yeah. Pound dollar, yeah, to the downside in that sell. We have to have another trade in place just in case, yeah. So there we go. Buy stop. Because then, if I'm wrong on this falling the way it is, then I'll take it on the other way back up. You see. So pound dollar has opened up two positions, one hedge. Euro dollar, one hedge. Dollar Swiss, one hedge there. That dollar Swiss trade. So, I mean, when the markets are stagnant, it can take a long time to reach 10 pips, isn't it? When the markets are moving, it gets there really quick. Sometimes this is what trading's like as well. You know, if I'm doing a lesson right now, I'll be talking a lot more. But with trading, sometimes it's like this. Sometimes it is a case of you're sitting there and you're watching, and you're simply monitoring and waiting, because you can't do nothing while it's in the trade. Not really. You can't move it while it's in the trade. So you need to let it play out. But all we're doing is we're simply like a bit like do you guys ever taken kids bowling, whether it be your kids or somebody else's kids? And for kids, when it comes to bowling, they have those barriers. Have you seen them? Yeah, you've seen them, yeah. Do you know what I'm talking about, Patrick? Yeah. They put the barriers up, so when the kid throws the ball, and you've got the ditch thing here, and then you've got your, you know, we're talking about 10-pin bowling, and these are your pins, yeah. Yeah, and then what happens? It can roll off, but it's not gonna go down into the dump thing, because the barrier that's here is gonna stop it and send it back and forth, right? That's all you're doing. You're like the barrier on the trade. That's what I'm doing. Is I'm just like the barrier on the trade. So if I, okay, cool. So what I'm doing here is I'm just simply making sure it stays within the barriers. You see, so it's pound dollar. Now the sell here is still within a recovery zone. I want to see what it's going to do. This can go up or down at this point here. Do you see what I mean? This will give us a bit more movement to see what's going on through this trade. We'll see how it plays out. It's interesting that 1 minute you see a lot more movement in the 1 minute in terms of like how it's moving. But let's see what this big move here is in 1 minute. Look, that's a 20 pip move in the 1 minute. If that was on 15 minutes, that same move would be worth about 50 pips or so. The new fundamental side. What does that mean, new fundamental side? Oh, news. You mean news? News. I thought there's something new you're talking about. Yeah, I did check the news. Can you guys see that? Yeah. So there's not much because the news from Japan was early hours of the morning. If you see here, there's not much going on today. We've got some news coming out, and we've got Carney speaking, but it's at 3 p.m. You see, so I would expect there'd be a lot of jagged movements off the back of what he's saying, if anything, really. And then you got some US dollar news. I'm still expecting for the dollar to tank anyway, but let's see what happens here with these trades. Alright, look, Ference, you see what you said about the when I trailed the stop? Did you see that? Now it's gone now it's gone 2 pips. Now I can think about trading the stop, you see, because now it's starting to move in my favour. So in the first instance, really, what I'm going to do in the first instance is just do that. Make sure my stop loss is at break even. You see that? So now I can't lose anything. Now I'm going to cancel dollar Swiss. I'm going to cancel the trade. So what you do is you become like a fund manager, managing the positions. Do you see what I mean? Once you're in. Does that make sense? Yeah. Cool. So that's all we're doing right now. We're just managing. We can manage a lot of it if we didn't have these charts and stuff. We just had that. We could manage a lot of it just by looking at this here, just seeing what it does. We know what it's going to do. We know that it's closer to stop loss. Just move the stop loss down. We know that our buy on the euro at the moment hasn't done much, and if we just do that, we can see, hasn't done much. It's still more or less in the same place that we got in. And then pound dollar as well. There you go. Something just triggered. Pound dollar just triggered. So you see, pound dollar just triggered. It's just pushed up. Yeah. Let me just do that so we can see. You see that, yeah? Now that it's done that, I have to have in place excuse me, my next oops, wrong one. Sell stop. So I've got to have it in place, yeah? You see that? And what does it do? And this is just a 1 minute chart. That's only a 15 pip move from here to there. It's a nice move, but it's only 15 pips. But it gets there a lot quicker. Look, that one there is 18 pips, 17 pips. Remember, on 1020, you need a range of 20 pips on a 1020. Do you have a list of pairs which are correlated positive and negative? Do you know what I'll probably do? A list of pairs that's correlated positive and negative. Let me quickly check. I've got something on correlation here. Find. No, it's not there. Where is it? Search, ST, search. Nope, it's not there neither. Oh, I've got this search thing. Where is it? Oh, it's this one here. Let me see if I can find it. I've got something on correlation. Oh, it's not coming up. I have to find it. I have to find it. It's saying 0 options. Why? Did I spell it wrong? No, it's still not finding it. Alright, cool. I have to find it for you, but I do have a presentation on correlation. But what you can do as well, when it comes to correlation, and there's a reason why it's good to do this when it comes to correlation, it's just to do. Do you guys know Baby Pips? Babypips.com. Do you know this? So what it does is explains how how the different pairs correlate with each other. Yeah. Do you guys know babypips.com? Do you know this site? Yeah? Cool. So it tells you how to read the tables, and you complete lessons as you go along. It's well worth doing. So this is probably what you're talking about, Patrick, when you're saying list the pairs that correlate positively and negatively and so forth. So it shows you here and how much they correlate based upon a specific amount of time. Do you see what I mean? So week, month, 3 month, 6 month, year, and so forth. These are dollar yen, so it's more yen related, but you can see how it correlates with each one. Does that make sense? So if I'm pound dollar, I can see that pound dollar over 1 week will have a 0.94. So that's quite a high correlation. Do you see what I mean? Yeah. So let me get this. Just if I put this in the group for you guys, yeah. If I do that, yeah, you guys have got that. Cool, perfect. What's going on with the trades? Let's see. Do you guys ever get bored watching charts? Do you know? I don't get bored watching charts, but if you have to sit there and watch the chart and do nothing else, yeah, then it's a bit like a job, isn't it? Do you agree? It's not the worst job in the world, but what you can do is go right click, trading, alert. See that? The red line? If I put that there, that just tells me that this has come up and it's hit my take profit. Now, I need to put another, I need to know when this has come down and crossed this line as well, don't I? Yeah? So I can put in here another alert. Whichever one it hits, it's going to make a noise. So now let's say that all of a sudden, for whatever reason, wait, we've got other trades on, haven't we? Got to make sure we know what they're doing as well. One of them is triggered at 3, which is pound dollar, which is one that we're in. This is pound dollar. Cool. The euro is still yet to trigger at 3, but I need to know if that's going to happen. So if that comes down, I want to know. I'm going to put an alert in here, and I want to know when it's hit my target as well. So I'm going to put another alert here. And wherever you put the alert is where it will alert, so you can move it around. You were doing it this morning, yeah? It's good to do alerts. And then dollar Swiss is the last one. Dollar Swiss, Ference. You asked about dollar Swiss and moving the stop loss. Do you see? I mean, the stop loss protect the position, and then left it to see if it will run. Do you see what I mean? Now you can see that it's given me a little bit more profit. Now I can look now to start doing that. Or I can leave it, because I didn't move it beforehand. I can leave it. It doesn't really matter. Whatever happens, I know that I'm safe. So the question is now, do I want to close it for 3 pips, or do I want to see if it's going to run? Yeah, have a look at this. If I trade it now, this is the question you got to ask. 4 pips. Do I close it now? Do I trade it now? Do I let it run? Yeah. Let's do the maths behind it, just to have some logic behind it. It's good to use numbers. So 10 pips equals 100. What was that? 4 pips? 3.5, 4. Let's call it 4. 4 pips equals 40. Now, let's say it comes back and stops me out. I'm going to make half a pip on this, which is going to be 5. And no matter what happens, I'm going to make on the one lot. I'm still going to make a $10 rebate anyway. Yeah, I'm still going to get $5 rebate out of $10. So I'm still going to get my rebate. Yeah. Right. So what do I want to do? Well, if I keep closing them at here and I keep banking this, that's all right. But if I bank once at this, yeah, and once at this, I'm still going to be up more doing it this way than I am doing it this way. See, well, so the point I'm making is at this point here now, I don't need to get involved. I don't actually, because I've gone to break even. I don't need to do anything. I don't need to manage it no more, do I? Not really, because I'm protected at break even. I'm only looking for 10 pips, so it's not that big a deal. So it requires discretion. Trading requires discretion, but you do this anyway. Do you see what I mean? So for example, when you're looking to get into a market, you're not following the most strictest set of rules to get in. It's not this number has to say this number has to say that, and this number has to say that. They're all three matched up, right, let me get in, because it's a dynamic moving market, so you always use a certain amount of discretion regardless, no matter what you do, you see. So in terms of discretion now, we could say, well, I'm going to use my discretion and I'm just going to leave this one going, because if it can't do me any harm now, it can't hurt me. Does that make sense? It can't hurt my account, so I can ignore that one. So back to here. So for here, I don't need to have an alert in place. I don't need to worry about it. I don't even look at that chart no more. I can leave it. My job's done on that one there. So now I'm looking at this one here. This is pound dollar. Pound dollar, I'm still actively trading, as you guys know. Pound dollar is still 1 pip away from our take profit. Still 1 pip away from breaking through. But that has to hit our take profit before our stop loss, right? Yeah, agreed. Because our take profit is lower, isn't it? Yeah. Stop loss. No, sorry, it's taken. See that stop loss is from the other trade. We don't need to know about that. Yeah, so I can just leave that. Can you guys hear that? Dung. Did you hear that? Dung. Anybody hear that? Dung. No. No. That was my alert. That was the alert going dung. Let me know. So this is the same thing, Ference. This one here. I'm going to take this thing to break even. I'm going to then cancel my sell stop. I don't need it, you see. So we saw one instance where we had to hedge, and 2 instances we didn't have to hedge. Because why did we not have to hedge so much using this strategy? Is because when the market travels to the band to get there, it's a bit like an elastic. You know, I used to do this. I don't know if I can show this to you guys. I can't remember what we call it, but it's a bungee cord, and it's a bungee. We use it for wrestling, bungee fitness. It might be, but here we go. Excuse me. That's not it. That's not it. It attaches to the wall. So see if I can show you a better. I want to show you this because I want to make a point. Yeah. So you can understand it using an analogy. So it's like bungee, bungee run. I wonder if I can do it as bungee shots. No, because it doesn't understand the terminology. Alright, it doesn't understand the terminology, that's what it is. Bungee sprints. Okay, look, this is it. This is it. That was it. That was it there. Here, look, this is a better example. Look at this. Watch this. Watch. Can you guys hear it? No, okay. Okay. No. Even if I do this, you can't hear it. Watch. Do you see? Watch what she's doing. Do you see what she's doing? Yeah. So you see what she's doing it. What she's doing isn't great, but in terms of it's not the best of examples. And when we did it slightly different than this, because what it is like we had to extend. Yeah. So you see the cord. You see how the cord is lax on her back. Yeah. So you see the cord is quite lax on her back. So we used to be more forward, and then what it is like, so she should have to over push to reach this. Do you see what I mean? Do you see what I mean? Yeah, she should have to over. You heard some alerts. That's my alerts. That's their ding, ding, ding. It's annoying as hell, though. When you have them on, you will find that they become annoying. But you got to remember to delete them, because otherwise they can become quite annoying. So now we don't need this one down here. Do I need this one up here? No, I don't. And then for the other dollar Swiss we don't have any. We don't need it. Because you see, oh sorry, is that what you mean by touching the band? By touching the band, yeah. It's that same thing. What I mean by touching the band, yeah. So this one here. This is a better example. I'm sure. Look, watch. Just look. Do you see how do you see how it pulls him right back? So watch when he sprints. He's really sprinting. Watch. Bam, 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 bam. That's extended cord already. Hers wasn't extended so much, but you see it's already extended cord, and he's having trouble getting to the kettlebell. But that's what he's doing. Watch. Extended. Do you see how much he's running to get there? Yeah? Give me some feedback, guys. Do you see that? Yeah. Alright, so it's important to understand that that guy there, yeah? This guy, his name is Price. Okay? And this here, this kettlebell, its name is 2.5 deviation. Yeah? This mat here, yeah, is the distance between the bands and stuff. So now when we switch back to our charts here, when we see the bands, that thing's running. It's running, isn't it? Look, that thing's running, touches the band, and then it has to pull back. It can still, once it's extended the cord, it can still push forward a little bit more to touch that kettlebell, but then pulls back. Yeah. Do you see what I mean? About getting you better entries. Is that making sense? Yeah. So yeah, so it should help you get better entries. So when you're sitting there, especially during the day that you're trading, when you're sitting there, and what happens is you're simply trying to make some money. But at the same time, you know, the big question is, where do I buy, where do I sell, and so forth. Nothing's foolproof as well, right? So that's why it's just like, for example, so I want to give you another example, right? So I had one client that, so he was just he wasn't worried about entries. So he was getting in anywhere almost. It's like, I can get in anywhere. I can just hedge my way out of it, yeah. So he's trading away and growing his account. And I kept saying to him, like, you're gonna have a bit of a problem with that, yeah. Look at this thing's just tanked off the back of something. So it's closed out both my positions. So you can see what it's come down. It's closed them out at the stop loss, yeah. Didn't quite hit the target. Do you see that? Yeah. So even though that didn't quite go as planned, you could say in some ways, oh, did something go wrong in that way because it didn't hit our thing. Doesn't matter, it's neither here nor there. Nobody cares. What do we care about? What do we care about? We care about that we're protected, that we're safe. Now, did you notice every time I'm putting my hedge in place, yeah? Like, so for example, if I had a hedge triggered here, down here, even if I was hedged here and it's going in my direction, if I'm hedging, I would still have my hedge trade placed here, even if this is moving to my target. Have you noticed that I don't start cancelling it unless my stop loss is moved up to break even? Yeah. The reason being is for things like this. So if that happens again, the spike comes down, bang, you know, and look, what does it do? Where does it hit when it hits the bottom band? It's overextended, drove down, bang, drove back up again. You'd have been in and out of that trade, no problem. Obviously, it was too quick for you to take it, but that's not the point. The point is that you see how it reacts to the bands, yeah, when they're like this at this deviation. Do you see what I mean? Again, up here as well, yeah. So yeah, you wouldn't have taken this trade simply because you're saying, look, it's done what I wanted it to do, but this hasn't hit the This hasn't hit my. Do you see what I mean? But wait a minute. This is supposed to be 75. Sorry, my bad. Why is that not 75? Yeah, that one's correct and that one's not. Sorry, that's my bad all along. That was. Did you see that? Yeah. So the bottom one was 25 and the top one was 80. Did you guys see that? Yeah. So all I did is adjusted this one, so it's the same as this one here. It's supposed to be the same, um, because we're using the bands with it. So what's causing this rally now? See a nice move up here in. Are you not sure what I did, yeah, Patrick? Do you know what it is? It's like, yeah, this was set to 8. This was at 80, and this was at 25. That was supposed to be 75, not 80. So, but then now you see where it hits here and hits here at the same time, yeah. And then typically you're going to get your move in your direction, and this is a 5-minute time frame, and it's driven down, and you got what 20 odd pips there. Do you see what I mean? Yeah. That thing has it. Look at this thing here. See this thing here now. What's going to stop us taking this trade here to the downside? I mean, I'm tempted, but I'm not going to do it here in the room with you guys because that's going to invalidate our rules. Hasn't hit the top. Hasn't hit the top. Do you see what I mean? You see that? Dolly yen. Look at that. Dolly yen. Most is going to break. It's going to break. It's going to break, and it broke. I'm going to take a quick trade here. One lot. What am I going to do? I'm going to buy or sell it. Buy or sell? Sell it. Alright, so that's 2010. Alright, so why am I going to sell it? It's pushing up, it's like it's breaking out. What I'm doing is I'm sticking to the mean reversion side of things. I'm not trading the bands as a breakout, I'm trading them as a mean reversion trade, yeah? So, now, what do I need to do that I've got that in place? I'm still going to put my hedge in. I'm still going to hedge it. 8 pips. So even though I'm not rushing to hedge it, as you see, I'm not in any rush to hedge it, but neither am I going to just leave it and let it play out without having the hedge in place. Yeah. If this thing decides now to go from here and just shoot up again like this, then I'm alright. Do you see what I mean? So that's all you're doing. It's like you're kind of like, you're not sitting there trying to, you're not. So the point I want to make here, and we're going to wrap this up in a minute, is you're not here trying to combat these price bars and predict them and stuff like that. All you're trying to do is you're trying to simply follow a set system. Look for the bands, look for the money flow index. Money flow is about money flowing in and out. Overbought, you sell it. Overbought, oversold and overbought. Overbought, you sell it. Oversold, you buy it. Simple as that, yeah? Make sense? Questions? Anyone? Questions? Cool. So let's see how the market. Let's just wait 5 minutes or so. See if we can get a closure on this trade. See, I like the reason why, and you guys will notice. I always say like, let's do some live trades together. Do you know why that is? Do you know why that is? Why do you think that is? That I might say, huh?
It just puts weight to your words, I guess. Puts words, weight to your words.
See, yeah. So that's yeah. And so some people say, because it proves that it works, or proves that you can trade, or proves this, proves that. I'm not looking to prove anything to anybody. All I want to do with this is I know how we learn, and we learn from seeing more than we learn from being told or reading. Monkey see, monkey do. That's how we work. You know, that's how the human mind is. So it's like you look at kids. Look at your kids. Have you guys got children? Yeah. So if you look at them and you will see, or even if you've got friends that have got children, and you watch your children and you watch what they do, and they'll follow some of your characteristics would be exactly the same. The way they eat, the way they talk, the way they sit, the way they move around, because it depends on whoever they've been growing up with, right? So it's like, so you see some boys, yeah, So, for example, have you guys heard of Tupac Shakur? Have you guys heard of this guy?
Yeah, yeah, yeah.
Yeah. Have you heard of him, Ference?
I haven't.
No. Okay. Right. So, he's dead now, but um, so uh, Tupac's an interesting character because he's quite a revolutionary. He was a hip hop artist, but his music was a bit different than the norm of what you saw out there. Yeah. Um, anyway, so the point is now Tupac was seen as a bit of a gangbanger and stuff like that, and that type of thing in the US, yeah. And there are different ways that they described him, but I mean that's not the point. The point is if you watch Tupac speak, yeah, and he's a very charismatic speaker, but he had certain feminine qualities about him when he spoke, yeah. So when you watch it, some of his hand gestures and things like that seem to be a little bit effeminate, yeah, right. It's a little bit effeminate, yeah. So if you watch him and you watch his hand movements as well, and it's a little bit effeminate, yeah. And so why is that? You know, so I don't think Tupac was gay because I don't believe that to be the case. You know, he wasn't camp in any way at all. He wasn't camp, yeah. Normally you see it from guys that are camp, yeah. They're a bit effeminate. You notice that? So, but Tupac has certain feminine characteristics. Now, if you look at Tupac's story, who raised him? He was raised by his mother. Do you see what I mean? So that's why some guys can be effeminate if they've got just a strong woman in their life because they pick up her characteristics to be like her. Do you understand me? Yeah. Um. So, and I mean, I've seen it before. Do you see what I mean? When you see like young kids where they just have the mother and you see them do certain things, it's like, oh, what are you doing that for? You're not supposed to do it like that. You're supposed to do it like this. But monkey see, monkey do. Do you see what I mean? That's how we learn. That's how the mind works. So when I did that presentation on myelin, there was a reason why I used that because what it is, as we see, we mimic, and as we mimic, we then start to develop the characteristics. That's the only reason why I'll trade live with you guys. And that's not the only reason why. That's the main reason why I trade live with you guys. It's not. I'm not trying to show you anything or prove anything to you. Do you understand me? If I had to prove my abilities in the markets, then the whole thing would be a bit stupid in itself, wouldn't it? You know, it's a bit like going to a doctor and say to a doctor, well, let me see you cure somebody else before you cure me. I want to make sure you know what you're doing. You wouldn't say that, would you? Do you see what I mean? So it's for that purpose that you can see. Because you can see, you can say, okay, I can see what you're doing. I see how you do it. That makes sense. Do you see what I mean? And it answers a lot of unanswered questions, yeah? You with me?
Okay.
Cool. So wait and see how this thing plays out. I mean, it's still pushing quite strongly for some reason at the moment, but that can happen. Remember, do we care? Do question? Do we care? Do we care what it's doing to that great degree?
No, not when you got your aging first.
Not really, because you know we know that we can manage either side of it. We're not sitting there panicking about anything, which should make your decisions a lot more easier to make. I still sell this, you know, because now we're on an hourly time frame. The only reason why I've gone to an hourly is just to zoom out and have a look. But you notice, no matter what, I've got this in place. If that thing turns and runs against me, what am I going to do? I'm going to be okay. So you saw what happened last time on the previous chart? When that pound, when that was that pound dollar, euro dollar, when that did what it did, spiked down and back up. Remember you saw that, yeah? Same thing here. If that happens now, if this thing spikes either way, I know I'm safe because I've got it in place. It's the only one that we've got to look at, but if I want to know if this thing's come down here without looking at it, alert. If I want to know if this thing's hit up here without looking at it, alert, yeah? You see that, yeah? Do you see that, Ference, as well, yeah? Why do I do that if I'm watching it? I'll tell you why, because you know when you're watching it and you're just there and you're just looking and looking and looking, you know what can happen? You can get distracted. You can all of a sudden do something like this. Oh, let's see what's going on here. Do you see what I mean? And you start looking at something else, whatever it's going to be. I don't know, but let's say that. But do you see what I mean about the bungee cord thing? That's what it's for. Same principle, same premise. Oh, I'd love for you guys to see this play out, but if it doesn't play out in 5 minutes, we'll just have to end this session here, and then you guys can monitor it a bit later and see what it did. But you see how I've got everything in place there, yeah?
Yeah.
So while we're waiting, let me explain something. This is here, yeah, is your profit zones. Yeah, from here to here. This here, this is called the recovery zone. Recovery. That's the recovery zone, yeah, from here to here, yeah. And when it's in there, you're not making any money. As soon as it breaks out, either side is where you start earning. Yeah.
Okay. Right. Put it back. Put that back. Can you put that back?
Who, me?
Yeah. I'm doing a print screen, man.
Oh, I'll send you this. I'll send you the video. I'm recording it.
Oh,
Yeah. That there's a recovery zone. No, I'll write again. I'll write again for you. Okay. I didn't know who he's talking to just then.
I was talking to you.
Yeah.
Listening, man.
Right. Where's my rubber? There's no rubber. Okay. Anyway.
Oh, a quick question.
Yeah.
The MFI, how big is the period? Is it 8 or 6? Because
Eight.
the little
8.
8. Okay.
Yeah, 8. I'll send you the template. I'll send you this template so you can have it. I'll send you everything from today, from here. Yeah.
I already have it now.
Oh, you do, yeah. Do you have these marks? Do you have these marks in it as well? Do you have these marks in it?
Yeah.
You do. 75 and 25, yeah.
Yes.
Yeah, perfect. And then you got 90 and 10.
I just entered a euro trade and it's already going very well. 7 pips. 7 pips in my favor. 8.
Oh, there you go. See, nice and easy, isn't it? Nice and easy. Yeah, nice and easy.
Pretty good.
Cool. So I think you guys kind of get the gist of this, isn't it? Can I delete this now? Pat? No.
No.
No. Okay.
You forgot the other arrows, man. You have some other arrows on there, like the
Yes, I'm doing it now. Profit zone.
Mhm.
And then here as well, same thing. Profit zone. I'm trying my neatest handwriting for you, Patrick. Doesn't leave much hope for the future, does it? I
It's actually atrocious.
know. Here we go. There you go. How's that?
Oh, wicked. Yeah, I've got it now.
Cool. So I can delete it, yeah?
Yeah, you can.
Yeah, cool. Right, so at the moment we just gotta wait and see what it's gonna do. But right, so this is gonna be a bit long-winded if we're just sitting here waiting, isn't it?
Do you think I haven't got that indicator? I don't think I've got it.
Oh no, I'll send you the whole template. I'll send you the whole template. I'll send you everything. All right, so should we wrap this up here so we're not just doing this for way too long?
Yeah, I think to get it
You do, yeah?
I have to go anyways.
Yeah, perfect. All right, cool. I'll send this all out to you with the video anyway. Yeah. I'll include everything and I'll send it out so you guys have got it, yeah? Any questions? Ference, we don't need to do that live session no more, do we? Because this is what we was going to cover, isn't it? Yeah. So, excellent. All right, brilliant. Thanks for being here, guys. Appreciate your attendance. Any issues, give me a shout. If not, I'll speak to you guys later. Or if I don't, have a good weekend. I'll speak to you Monday. Cool. All right. Cool. Take care, guys. Bye. Bye now. Bye.